Good morning, ladies and gentlemen. A very warm welcome to you on Tuesday. The markets are flat as far as indices are concerned. It's the weekly expiry of the Sensex, therefore flat range-bound trade both on the Nifty and the Bank Nifty. The Nifty unable to now even hold 24,700 as selling pressure around 24,700, 750, 800 puts paid to any hopes for this very strong resistance to be broken. The Nifty Bank down 100 points and the IT index also slipping 91 points lower. But what is in top shape? Lots of PSU banks ahead of the RBI credit policy meeting later this week, and of course good monsoons mean that fertilizer stocks and sowing would be very well. Therefore stocks like fertilizers, FACT, RCF, GSF, CG and FC are doing pretty well. All of them up in strong single digits, anywhere between 5 to 7% is the gain on many fertilizer stocks, and interest rate sensitives, particularly PSU banks and of course real estate companies are doing pretty well. Let's get a view from a market expert. Shri Arun Kejriwal joins us, a person who's now in his third decade of watching these markets very closely. Namaste Arunji and a very warm welcome. How do you see sentiment on Dalal Street at this point of time? A view that you would have on PSU banks and maybe fertilizer stocks.
So good morning, Shail, and through you to all your viewers. So it's a very interesting state that the markets are in. Let me take you back to say about 3 weeks. The markets were given a sharp jump on the 12th of June, Monday, post hostilities between India and Pakistan being given a breather. And that one day jump, which saw Sensex gaining about 3,000 points, Nifty close to 925, 950 points, we are still struggling to digest those single day gains, which typically don't happen in the marketplace. So while we did go up briefly and almost touched 125, 150 on the Nifty, we seem to be struggling thereafter. Just some pointers, what's holding back real news flow. While the India-US trade treaty is likely to happen, discussions are on in advanced stages, and probably by the end of June, we'll have a policy. We keep on hearing that Russia-Ukraine ceasefire will happen, but it's an ever-eluding one. If you look at result season, which has just got over, not disappointing, but not something which would get your adrenaline pumping and going. All of this put together makes the mood on Dalal Street a little tentative, a little expectant, and as you would say, wanting more to happen. Coming to your other two questions, PSU banks, yes, there is an expectancy that there would be a rate cut in the ensuing meeting, which outcome would be announced on Friday. Probably a 25 basis point cut is what is on the card. If it is more than that, it would come as a complete shocker and surprise. But I believe par for the course is 25. So that's keeping the PSU pack active. Performance by and large for PSUs has been decent this particular quarter and financial year. So people believe that with monsoon coming ahead of schedule, monsoon expected to do well, things should be good. Final question, fertilizer stock, this is always a season when fertilizer is in the limelight because of the monsoon.
Fair point. So, Arunji, now that you've gone into the fourth quarter detail of a lot of earnings, how do you see them over the last 15 odd days? Any outliers, positive outliers that you may have isolated, any negatives that you may have felt creeping into possibly a sector or possibly a particular industry. And within the fertilizer space, given that this is a periodic and a predictable movement, what would be a good, how should I say, technical or a good practical pick for a nice brief dalliance with the long side?
So the last question, I don't have an answer. I'm not too sure what can be a quick short-term bet on fertilizers. I have not analyzed the space that well because I typically take it that this is the flavor of the period during this part of the year. So almost everything goes up, but whether something can be an outlier or not, I'm not too sure. Uh, Talking about the results, by and large, results were on expected lines with some sort of comfort on the growth factor and some improvement in profits. The misses or the failures were far fewer than expected. So you could say that this particular set of results this quarter has given hope that things could improve in the future, unlike the previous 7, 8 quarters where you kept on hoping against hope that things would improve in the next quarter. So here there is hope, there is improvement. And if you look at the Nifty basket, which would consist of those 50 stocks, they seem to have performed well, even including the IT pack, where the negative surprises that were expected did not happen. So overall, there is optimism post the results. But if you were to say, does that make many of these stocks uh, good buys in the market? Not necessary. But you don't come up with a sell recommendation based on the quarterly numbers.
Okay, okay, fair point. Arunji, you've also been one of the keenest observers in the IPO space, and more importantly, post the IPO's listing once the fancy is over, once anchor investors have exited, and of course, once the prices have corrected substantially from their pre-IPO and IPO hype. Now, anything on your radar in this space that should catch viewers' attention?
So let me divide this answer shell into two parts. Just yesterday, we had two mega listings that took place. One was the Leela, as it is known on the stock exchange, and the company that went public, Slosh Bangalore Limited. Now, this runs the Leela group of palace hotels in the country. It had come out with a
Yes.
3,500 crore IPO, a fairly large IPO. And as far as valuation was concerned, the street view was that it was expensive and it offered a little or nothing in the short to medium term, but was a longer term play when new hotels, new keys would come up, say in about 18 to 24 months' time. Uh, the listing was the discovered price was about 6.5% below the issue price, and the share, if I could use the word inverted within inverted commas, managed to close marginally higher than the issue price of 435. Today the share is back
Yes.
to sort of little struggling, showing some signs of weakness. So one should take yesterday's price uh, closing with a pinch of salt. The company will have to deliver numbers uh, beyond the 2,500 crore debt repayment that they do for investor interest to come. The second listing was Aegis Vopak,
Okay.
2,800 crore. The share managed to close at an upper circuit, gain about 4.5%. The question here is that when you have an issue of 2,800 crore, you have insignificant revenues in relation to this fundraise itself, and even lower as a percentage or a ratio if you were comparing it with the market cap. It clearly means that investors have not been explained what the company is all about. And therefore, the lukewarm response from half the issue, that is the retail and the HNI. I believe it's time that merchant bankers took upon themselves the responsibility of explaining to this segment what needs to happen, what is the company all about, what will happen in the future. It's time that taking SEBI's name, we cannot talk about the future, etc., needs to be corrected. Coming to your second part of that uh, all encompassing question, I believe there have been quite a few issues which have come after the hype. Almost all have corrected. Some of the things that look interesting are companies where they have multiple businesses. Uh, the IPO, what actually is the activity that the company does. And now things are playing out as 2 quarters, 3 quarters of results are coming. Going back to some of the events that have unfolded, I believe there was some of the companies that I have even spoken about in the pharma space has announced excellent results for the quarter, full year, and its path to progress that it has been talking about is well defined. They are adding capacity, ramping capacity, setting up a new plant, and catering to the increased demand that is coming from them. One of their key areas is media, where if you remember, when you go for a CT scan, they make you drink something, and that liquid that you drink is captured on the machine where that liquid is passing, and if there is any obstruction, that is captured. Now, this contrast media that we are talking about, this company is one of four manufacturers in the world. It has a niche clientele where all the big players, who's who in the market, are its customers. So I believe this is a excellent investment for the medium to long term. In the short term, you do get ups and downs. So this continues to remain a favorite pick for me. One other company that I like to talk about from the pharma space is Innova Captide. Besides the product range CDMO player, it has set up a new unit in JNK, Jammu and Kashmir, Katua. Now, the government had announced incentive schemes for units which came up in this particular area to promote J&K. And as per the terms of that, it gets an incentive if it produces a certain amount of value of products at the new unit. And there is a straight subsidy that flows to the company. The company has hit the threshold in the first year. And if it is able to do this over the next 5 years, it would be getting that incentive amount every year. So this would flow straight to the bottom line, as there are no other costs associated with it. So these are two companies which are about 12 to 15 months old in their IPO journey at the stock exchanges and seem to offer good value in the medium and long term.
Okay. Arunji, I would failing in my duty if I don't tap your thoughts on the rally that we've seen in defense counters. Anywhere between 50 to 80% is the rise in four or five PSU defense counters since May 11th, ever since the hostilities ceased between India and Pakistan after an 87-hour war. How are you now looking at this space? Is it overstretched? Does it worry you at this level, given the rampant enthusiasm that you see for these counters? How are you looking at this space?
So, so Shell, you are also an old hand in the market, and you remember there is a flavor of an industry in the market which keeps on coming at different points of time. Some 20 years ago, we used to talk of IT as the flavor of that time. And if any company had an IT word in its name, it was favored at the market. So you found companies changing their name to include IT. Uh, Sometime later, you had different connotation. Now, solar is a big buzzword. Some time ago, defense started coming in, and you had many companies adding defense to the name. What has happened is that the new breed of investors who have joined our market, and mind you, their number has taken the base of investors fivefold ever since COVID in March 2020, are somehow or the other attracted towards the PSU pack. And within the PSU pack, three favorite hunting grounds for them. One is defense, second is power and energy, if I could say, and the third is the railway. Some of the enthusiasm is anticipated, expected, welcome, but a lot of that enthusiasm is unwarranted. And therefore, when you had the correction which started in September 24 in the market, these three sectors within the PSU pack were the worst affected. Now, look at it. You have a
Hmm.
scenario which nobody could have even dreamt of. You had this 87-hour conflict, and the buzzword was defense, 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 and only defense. People jumped in. Whatever correction took place over 3, 4 months was literally covered up in 3, 4, 5 trading sessions. And most of it in the first 2 days, that
Yes.
is the 12th and the 13th of May. Very clearly, such gains are
Correct.
unsustainable in the medium term. But today there is that euphoria, there is that excitement, there is the belief that new equipment would now be manufactured, new consumables would now be manufactured because we have used a large part of what was there in stock. New technologies are coming in. So while I'm scared about valuations currently, I believe a distribution from these levels where prices come down in any meaningful manner may not happen in the near term. It could take a little longer time, and valuations could remain at elevated levels, much to the discomfort of people who track markets.
Okay. Arunji, would you have a view on Yes Bank at current levels, given that we seem to have a new suitor in the C suit, and the possibility that the management might shift from Indian hands to deeper pocketed Japanese hands? How are you now looking at Yes Bank from the view of a long term investor?
So, couple of things. Today, you had large number of block deals happening in Yes Bank. I believe people who had entered Yes Bank through investments which were done in the range of 12 to 13 rupees, where if you remember some time ago, two PE investors had come into the company, probably some profit booking has happened from them, and it could also be from various entities to whom the government had allotted shares when the bailout of Yes Bank happened. The price at which the Japanese have entered this company, Mitsubishi, would now become the new benchmark for Yes Bank. So a range of say 20 rupees to 23 rupees would be a fair comfort, and for any meaningful upside and sustained, which could only happen the bank has the strength to cross a valuation which would be derived at 23 rupees. So you have a good trading range. Volumes in this share are very high. About many people whom I know who typically trade this share in quantities of 50,000 and a lakh of shares on an intraday basis. The movement is big bucks for a single day. Coming to your question of what could be the activity, 2023 is a comfort zone where it would trade, and a breakout above 23 alone could influence or bring about new trading activity in the share, for which I believe you need to give the new owners at least 6 months before you get some indication of which way the bank is moving.
I agree with you. That's a honest to heart short term as well as medium term view. Uh, my my thought was that if you could elaborate on the fact that we've not had a banking failure of any magnitude in the last maybe 25-30 years that you and I have been in the markets looking at them actively. At 20-23 rupees, buy for maybe 3.5 years, maybe 5 years.
So let's talk about the banking industry per se in short and what Yes Bank brings to the table. Like you mentioned, banking by and large in this country has been very stable. The weakling in the banking space was the PSU space, to which the bank, the government has taken corrective measures, infused capital when NPAs were on the rise, recapitalized the PSU banks. Now, considering their efforts, they have reaped large dividends as well. And today we have a banking system which is robust and doing well. The future augurs well, as India is not necessarily about large corporation, is SME and which is rocky. So considering this, the demand for banking is huge. In this environment, you have a deep pocketed investor who has taken a large controlling interest. And this particular investor has been in the banking space for, let's say, donkey's years. So he's not new to the banking space, he's not new to India, and they have various interests which they are in. So it's a very large conglomerate and maybe one of the top five corporations out of Japan as a group. Considering all this, if you have a larger vision, which is rare in this marketplace from the audience that we are addressing to Shell, I'm saying this with your permission, because people here are looking for shorter term picks, and 3.5 year horizon is not normally what they do look at. But yes, with 3.5 year horizon, I believe this share could give you uh, close to 70-80% returns over that period.
Ji. Actually, Arunji, the reason why I asked this was that in terms of retail shareholding, Yes Bank has the largest number of retail shareholders, both in
Yes,
number of actual numbers and the percentage of the equity as well. My point was that if they have held on to their investments from 120 rupees, 300 rupees, 250 rupees, does at this level, now that at least we have some boardroom clarity, should they average lower and can new people get in? Of course, you mentioned that as yes. See, our job, while is to navigate markets on a regular basis, but once in a while, once in 3 years, 5 years, comes an event
absolutely.
which creates immense wealth for
Perfect.
long-term shareholders. And now that you have a Japanese parentage, you have a banking system that's robust, you have MSME demand coming in, and the India-Japan FTA will always be using banking channels. I am presuming Japanese companies would be more comfortable with Japanese bankers. So, these are all ballpark things that we have learned only
Perfect.
from you over the last 30-35 years कि भाई macro देखो.
Sahi hai. So let me add one more point. You remember the days when Yes Bank shares diminished in value, a certain amount of your holding was locked in. You could not dispose it off for, I think, I'm not sure, 12 months or 18 months. And suddenly you
Yes.
found that the value of your Yes Bank investment has diminished to a small fraction of what the value was. After that, you found large number of retail investors joining the pack, even as institutional investors sold because there was no clarity what would happen to Yes Bank. But retail investors the price. Then they came out with a FP rupees was the price, and from there so look at it in retrospect. 11 is today 21, and 21 is comfortable. It's not that the price is shaky or you are worried whether tomorrow it could fall further or not. And the bank has weathered the storm. So have retail investors made money. So yes, you're absolutely right. With a 3.5 year horizon, this could be a bet where you are able to make money. And the price point at 21 is quite attractive. It doesn't hurt the pocket, and you don't have much of risk on the downside.
Correct. With that, Arunji, we'll call it a day on the market wrap for today. Thank you so much for your time. And as usual, we have two quality stocks from you in terms of long-term investments, which is Innova, CapTab, and Blue Jet. You have been talking about these for the last 1 year. People who listen to you have made tons of money, and of course, a very well-considered, thoughtful view on Yes Bank. Thank you so much for your time, sir.
Thank you. Thank you, Shell.
That, ladies and gentlemen, was Mr. Arun Kejriwal. He's been a market veteran for the last 35, 40 years. He's seen many a bull and many a bear market. He's seen many corporate revivals and many corporate upheavals. Please do look at an independent financial view if you think Yes Bank makes sense according to his thought process. And of course, keep an eye out on Innova CapTab and Blue Jet Pharmaceuticals. Thank you so much for watching.
India's top defense official